Good afternoon, everyone. This is Henry, and as I get into the evening review with you tonight, I wanted to start off by taking a look at a chart of FedEx. So there are several themes here that are the foundation of some of my favorite things in swing trading, and namely the idea of reversion to the mean concepts. So the mean, as I have always studied it, is the 21 EMA on the daily chart, or just the average price off of a daily with a 21 period look back. It's just a moving average that I've found works really well and is something that, helps you define the direction of the trend. So as long as that moving average is moving, in this case, pretty much directly lower, the idea would be to participate in a bearish way whenever you reach that price. Well, we saw that move here on Tuesday where it was hit nearly to the tick, gave an immediate about face, and now is also showing you a daily squeeze signal that is saying the movement to the downside could be accelerated. So I think this is an interesting chart to look at for a couple of reasons. Again, mostly what I want to do here is give you a target. Maybe November expiry, maybe it takes December and into the end of the year. And it could also be affected by UPS, right? A bit of a companion stock that is set to report earnings. So on the chance that that makes some type of a miracle bottom, it could move a little bit higher off of those numbers, but they could also accelerate the move to the downside, right? What I want to show you that I think is interesting about this chart and something that you find in so many names right now is this candle right here. And this is the movement that happened on October 13th, right? That was a very strong bullish day. But what was that bullish day driven by? It was driven by everyone that got short, right? Because that was the morning that the inflation data hit, looked super bad, on the front facing number. And then everyone comes in and buys puts. That drives the put call ratio almost to the highest value that you had seen in the past year. Well, when everybody is bearish like that, the market's in a spot where it kind of has to go higher. So you move higher off of that extreme sentiment reading, and then today we're right back where we were. So it didn't change anything. It just ground up those that were too aggressive with short dated puts, and now the market is going to go on and do what it intended to do anyway. So I think that's a good bearish setup. Again, have a little bit of foresight out into the end of the year. Be willing to hold that bearish position through any bounce that UPS might provide. Otherwise, I think that's a great spot to be short. So I hope that's helpful. You guys have a great rest of your evening, and we will see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.